Welcome to Explain the Charts, everyone. Today, September 22nd, 2025, we're performing an in-depth analysis of the USDCHF pair, starting with the macroeconomic landscape shaping its movements. Recent news highlights a significant monetary policy divergence. The Federal Reserve is expected to implement only 2 rate cuts in 2025, maintaining higher rates due to ongoing inflation and tariff uncertainties. Conversely, the Swiss National Bank has been on an aggressive easing path, cutting rates 5 times since March 2024 to a historic 0% amidst deflationary pressures. This policy gap typically would bolster the US dollar against the franc, but surprisingly, we've seen broad-based US dollar selling, which has sent USDCHF plummeting. FX quant signals are turning increasingly bullish on the Swiss franc, reflecting its safe haven appeal and the SNB's unique challenges, including a rapidly appreciating CHF impacting Swiss exports. There's even talk of the SNB potentially returning to negative rates to combat deflation and manage currency strength, while the Fed grapples with policy risk despite positive retail sales and strong equity markets. Now, let's look at the daily chart for USDCHF, covering a substantial period from May 2024 to the present. The overarching trend here is unmistakably bearish, reflecting the persistent US dollar weakness discussed earlier despite the interest rate differential. We saw notable declines in early June and mid-July of 2024, but the most dramatic drop occurred in early August 2024, pushing the pair from around 0.878 down to 0.857. This long-term downward pressure intensified significantly in April 2025, with price action breaking below key support levels and falling sharply from near 0.88 to below 0.82. Currently, we're seeing prices around the 0.796 level, which is a critical point as it approaches the near-term support mentioned in the news at 0.7900. The broad-based US dollar selling and CHF safe haven demand are clearly overpowering the theoretical bullish impact of the Fed SNB rate divergence, driving this sustained downtrend. Moving to the 1-hour chart, we get a closer look at the more recent, albeit slightly dated, price action from early September 2025. Between September 1st and September 4th, the pair was fluctuating primarily between 0.798 and 0.806, showing some range-bound behavior. However, it's crucial to note that the latest daily candle, closing at 0.79624 on September 21st, indicates a significant drop occurred after this 1-hour data ends, confirming the strong bearish momentum. The Econotimes report of USDCHF plummeting to an intraday low of 0.79166 fits this narrative of aggressive selling pressure observed on the daily timeframe. Let's zoom in further to the 15-minute chart to examine the immediate short-term price movements from mid-September. Specifically, if we narrow our focus to September 17th, from 1754 Universal Time Coordinated, we can observe a sharp dip from approximately 0.787 to 0.783. This rapid decline was met with an almost equally swift reversal, pushing prices back up and eventually climbing towards the 0.795 level by September 19th. This intense intraday volatility confirms the sensitivity of USDCHF to current market conditions and news, such as the USDCHF plummets headline. The article also highlighted resistance against the broken 38.2% retracement of the July trading range near 0.8071 and the 100-hour moving average at 0.8052, levels which are now significantly above current price. The short-term rally we see here, ending around 0.795, is a bounce back towards key resistance, but the overall context remains bearish given the long-term trend. From a long-term perspective, the consistent bearish pressure on USDCHF makes a strong case for continued downside, especially if the US dollar remains broadly weak and CHF maintains its safe haven allure. However, the SNB's potential move to negative rates could quickly reverse this, providing a strong bullish catalyst for USDCHF. For the short term, watch for potential reversals if the pair holds above the 0.7900 level, which has acted as a psychological and technical support, with immediate resistance around 0.7958. A sustained break below 0.7900 could lead to further declines towards 0.7860 and even 0.7800. Conversely, if we see a strong push above the 0.7958 resistance, we could target 0.8000 and the 0.8070 level, which previously acted as key resistance points according to Investing Live analysis. Traders should monitor U.S. economic data, particularly the PCE, and any hawkish Fed speak, as these could provide reasons to be bullish on the USD, potentially igniting a reversal. On the flip side, persistent deflationary data from Switzerland or any hints of SNB intervention to curb CHF strength would likely reinforce bearish sentiment for the franc. Recapping important price levels, watch the immediate support at 0.7900 and resistance at 0.7958. A break below 0.7900 makes a move to 0.7800 very likely, about 70% chance if dollar weakness continues. A clear breach above 0.7958, however, opens the path to 0.8000, perhaps with a 60% likelihood if there's significant positive U.S. data or dovish SNB commentary. Keep an eye on central bank announcements, specifically the Fed's dot plot and any SNB statements, as these events are critical catalysts for future price direction in USDCHF. Thank you for joining Explain the Charts. We hope this analysis helps you navigate the USDCHF market with confidence.